Hello, before we start today's video, just a quick note that if you are interested in purchasing this indicator, just simply email us at daytradinggps@gmail.com to request a discount promo code. In return for you taking your time for watching this video today, you can email us and request a discount promo code that will give you a substantial discount on the purchase of the indicator. All of our indicators are sold on a one payment for lifetime access basis. Thank you. Before we get started, today's video is going to be a shortened, condensed version of what we usually do in our SPX videos. So in this particular video, we're not going to go over all the different aspects of the indicator. We're mainly just going to go over today's trades for this particular session. If you are not familiar with the SPX Daily Key Levels indicator, then look in the description of the video underneath the video on YouTube, and you will see in the description these particular links that go into more details about how the indicator works and the trading strategy. So there's a video overview as well as additional resources with a Google Drive link for descriptions, links to other videos on different topics about the SPX indicator, and then there's also links to longer that are hour to an hour and a half long SPX trading videos that will go into a lot more detail about the indicator and the daily key levels strategy. If you click on this Google Drive link, we'll show you what screen that takes you to. That'll take you to this particular document, which will have links to other specific topics that are covered about certain aspects of utilizing the indicator. Thank you. Hello, in today's video we'll be taking a look at the Wednesday, January 7th, 2026 trading session for the SPX index. We'll be utilizing the Day Trading GPS SPX Daily Key Levels indicator, specifically the V2.0 version of the indicator, which is the newest version, which was released a few months ago. Okay, so today's video is going to be a shortened, condensed video. It's not going to be as long as our regular session videos. As mentioned in the preview, we have links to videos in the description of this video that will show you a general overview of this indicator, as well as longer SPX session videos that will go into more detail about how the indicator works and the different types of trades and some other aspects about the indicator. And there's also a Google Drive link that you can click on in the description of this video that will take you to various topics specific topics on this indicator, of which we've made specific videos for as well. Okay, so in today's session, we had 5 trades total. The first 2 trades were losses that hit our standard stop loss, and the last 3 trades were winners. So we had 5 trades total. These profit figures here are based on the standard play at the money options. There's 3 different option strikes that you can use, 1 at the money and 2 out of the monies on any type of bullish or bearish trade on any of the main key levels on this indicator. However, for purposes of this video, as far as the profit totals, we are going to just use the at the money options. We'll be showing you all the options, how they played out, as well as the prices and the profits on both the at the money and the 2 out of the monies on each of the trades. However, for purposes of the P&L here, we're just going to focus on the standard play, which is the at the money option, and the standard stop loss level on all trades, not the tight stop loss level. Okay, so trade number 1, we had a BBKPL bearish regular trade. We were stopped out on the standard stop loss, and we had a loss of $340 per option. Trade number 2 was also a loss, another BBKPL bearish regular trade. Stopped out on the standard stop loss, and that loss was $550 per put option. Trade number 3 was a BBKPL long regular trade. On that, we had a profit of $1,150 per call option. Trade number 4 was an R1 bearish regular trade. and that profit was $3,220 per put option. Trade number 5 was a BBKPL bearish regular trade, profit $2,020 per put option. So the total of the losses on the two trades that were losses totaled $890. We had $340 on one and $550 on the other. The total put option profits were $5,240, and that was from these two put option trades here. So the net total on the put option profits is $4,350 profit per put option for the session. And the call option profits, there was just one call trade, and that one did not get stopped out, and that was a $1,150 profit per call option. Okay, so some of you may already be familiar with how this indicator works from seeing our other videos on this channel. For those who are not familiar with it, this indicator works on the TradingView platform only. You can place your trades on any platform you want, like Thinkorswim, E-Trade, Robinhood, or what have you, or TradeStation, or other brokers. But as far as using the indicator is for the TradingView platform only. The indicator works on two different SPX symbols. So on TradingView, for what you see it on now, SPX, you would simply type in SPX into excuse me, into the symbol search, and then under SPX you would look for the CBOE exchange, and that is the official SPX CBOE index that everyone follows. So this is the symbol that you would use with the indicator if you're going to be trading SPX index options, and that is our daily key level strategy, trading SPX index options. You can also utilize this indicator on a second SPX symbol, which is the SPX 500 8-cap, which is a 4x CFD, which I'll show you now. So in TradingView, you would type in the symbol search SPX 500, and then you would look for the SPX 500 symbol under the 8-cap exchange. Now there's a couple of reasons why you might want to use this indicator on the SPX 500 symbol. One reason, if you are still trading CBOE SPX index options, is because when it is on this symbol, you can get the daily key levels for the indicator for CBOE SPX 30 minutes before the 9:30 a.m. CBOE SPX index open. If you're not familiar with CBOE SPX, it's an index that opens at 9:30 a.m. Eastern New York time. It does not trade. The CBOE SPX index does not trade in the overnight or in the pre-market. However, the SPX 500 4x CFD version of SPX on the 8-cap exchange does trade in the overnight and in the pre-market. So the way TradingView coding works on PineScript, which is their programming language, is that if your indicator knows what the levels are going to be for the session, however, if that particular symbol you have your indicator on has not yet opened, which in the case of CBOE SPX, it does not open till 9:30. So even though our indicator knows what the key levels are going to be at 9 a.m. Eastern, 30 minutes before the 9:30 open, it cannot display that on the CBOE SPX chart until the 9:30 a.m. open of the first tick of the open. However, we've designed the indicator so you can have it on the SPX 500 8-cap 4x CFD, and you can get the levels here on this second table, which is for the CBOE SPX at 9 a.m. So here we have the 9 a.m. candle. So at 9 a.m. you would see both of these tables on the SPX 500 8-cap chart. These would be the SPX 500 4XC daily key levels for that particular symbol, and those are the same levels you see here. They're for the SPX 500. However, the second table gives you the levels for the CBOE SPX at 9 a.m. 30 minutes before the open. This gives you time to do some planning and also some additional analysis on your own, and gives you a head start on the session. When the 9:30 a.m. first tick happens on the CBO SPX, you will see the levels here on the chart that will be these levels for the CBO SPX. Now, a couple of other reasons why you might want to use it for the SPX 508 cap is if you're not trading SPX index options and you have a Forex account with a Forex broker, then you would be trading SPX through a Forex CFD. And then you can utilize this indicator on the SPX 500 chart for making your trades through the Forex CFD. An additional reason is if you are involved in taking trading challenges through Forex-based brokers such as FTMO or the 5%ers or Apex or one of the many 50 to 75 or so trading challenge companies that are Forex-based, which that's what most of them are. Some of them clue in on futures, but most of them are Forex-based. With Forex, you can only trade indexes through CFDs. So with trading challenges, you pay a fee to take a trading challenge, and then they assign you a daily loss limit as well as a total account loss limit. And as long as you don't exceed any of those and fail the challenge, and if you instead make your profit target that they give you in the trading challenge, then they will give you a funded trading account that you can trade through them using their risk capital. And then, generally speaking, depending on the company that you're doing the trading challenge with, you will be able to keep 80 to 95% of the profits that you generate as long as you don't violate the daily loss limit or the total loss limit on your live funded account. And then the rest of the percentage goes to the funding company. All right, now we'll go back to the other chart. Okay, so at 9:30 a.m. Eastern New York time on the first tick of the CBOE SPX Index Open, you will see these levels, these daily key levels on your chart, as you will also see these two tables here. One is this table here with the bull bear key price level for today's session, and as well as the other main key levels, the R1 through R6 and S1 through S6. Also, you have this table here, which is these levels here, the pre-market high, which is the PMH, the pre-market low, which is the PML, the YDH, which is yesterday's daily high, that's the previous RTH session's high, the YDL, which is yesterday's daily low, the previous RTH session low, and YDC, yesterday's daily close, the previous session's RTH session close. Now here you see we only have 4 here on the screen. The fifth one, you have to drag your cursor down on the right axis, and then you'll see the YDL level down here. Now, you may be wondering why we don't have all 6 levels above and below in the chart that we're looking at. Well, that's because all 6 levels take up a lot of space. And even though we will have sessions in the year where we will reach R6 and S6, generally speaking, a few times a year you'll have sessions that will go up to R6 or down to S6. But generally speaking, you want to start off your session by taking your mouse and dragging the right price axis up and focusing primarily on either the R3 through S3 or the R2 through S2. And as you can see here, this gives you a much more granular view of all of these levels in here, which are all very important. And it makes it a lot easier to trade. If price happens to take off to the downside or take up to the upside, exceeding R2 or S2, then you can simply zoom out again with your right axis here with your mouse on it to track price as it moves through the different, if it moves below S2 or above S2. But generally speaking, most of the sessions, about 80 to 85% of the sessions that you'll see in a normal year, are on SPX at least, are going to range primarily in the R3 through S3 range. Okay, So as I mentioned, this is going to be a condensed video. We're not going to go into all the different aspects of all the different levels. And we're going to run through the trades, and since there's 5 different trades for today, and we're going to look at how each of these trades panned out. If you would like to see a more detailed video on the indicator and what all the different levels mean, then I invite you to look in the description of this video, and just as we mentioned in the preview, you will see links to other longer session videos that are about an hour to hour and a half long, where we go into much more detail about the daily key level strategy, the 2 different types of trades that you can take, scalp trades and regular trades, as well as many other aspects of the indicator, including what all the different levels mean. For right now, just understand that you can take bullish or bearish trades off of any of the main key levels with the V2.0 indicator. The main key levels are going to be the SPX bull bear key price level, which is your key bull bear pivot for the session, as well as any of the R1 through R6 or S1 through S6 levels. But usually, most of the action at the beginning of the session is going to be focused on this bull bear key price level. However, as we'll see in today's session, we did have trades off of one of the other main key levels as price action dictated. All right, so now we're going to move into trade number 1 and trade number 2, which were our first 2 trades, which were both losses, and then we'll look at the last 3 trades of the day, which were all winners. Okay, so here we have trade number 1. Here we have the 9:30 a.m. opening candle here. As you can see, we have a very long wick above and a fairly long wick below, and we have this little micro body here. So this is a candle of indecision. However, with our daily key level strategy, the way this strategy works with this indicator is if you're going to take a trade on the 9:30 a.m. opening candle, there's a couple of different factors. One is, where is the 9:30 a.m. candle closing? As you'll notice, we're on a 2-minute chart. The chart time frames that you would use with this indicator for this particular daily key level strategy that we're showing you, which is the same strategy we show in all of our SPX videos, is either a 1-minute chart time frame up to a 5-minute chart time frame, with the most consistent performing type chart time frame that we have found between that range is the 2-minute chart time frame. So the 2-minute chart time frame is what we're using today, and that is also the chart time frame that you'll see in all of our SPX videos concerning this indicator. Okay, so as I mentioned, the most important aspect of this 9:30 a.m. opening candle to set the initial buys for the session is, where is this candle closing? Not so much the intrabar, what's happening intrabar, but where is it closing in relationship to this bull bear key price level. As you can see here, even though it is a fairly tall candle, which spans quite a few points here, we do have a very small body in the long wicks here. However, it does close below the bull bear key price level. And as you notice in this note here, the close of the candle is still within the acceptable range for a BBKPL level bearish trade. We do have a video in the description. As I mentioned, there's a link to there's a Google Drive link, which if you click on that, will take you to a list of videos on specific individual topics concerning this indicator, one of which is 9:30 a.m. opening candles, and what are 9:30 a.m. opening candles to avoid, and what constitutes the acceptable range and the unacceptable outside the acceptable range for the 9:30 a.m. opening candle. And that acceptable and outside acceptable range also applies to taking bullish or bearish trades off of any of the other main key levels, the R1 through R6, as well as S1 through S6. So I'd invite you to take a look at that particular video if you'd like more information on that topic. So this candle is within the acceptable range. It is a bearish close below the bull bear key price level, so that is our bearish entry signal on this 9:30 a.m. opening candle. As far as stop losses with the indicator, your stop losses on entries are level based. If you do stop loss adjustments after it's met a minimum profit threshold on what we call a regular trade, not a scalp trade, but on a regular trade, at that time you would be changing your stop loss and adjusting it to break even or break even plus a profit buffer when it's met that minimum profit threshold on a 1.5 level move on a regular trade. You have the option of adjusting your stop loss to either break even or break even plus a profit buffer if you do not want to exit all of your trades at that 1.5 level move. However, the most important point I'm trying to make here is that on your entries, your stop losses are going to be level based, not price based. However, when you adjust your stop loss later, if you're inclined to adjust it, then you would be adjusting it to break even or break even plus a profit buffer, and that would be a price based stop loss, with break even being, of course, the price that you paid for the option, or break even plus a profit buffer. You would be adding a little bit of profit to on top of break even. Now, as far as the stop losses on this trade, you have the trade is off the bull bear key price level. It's a bearish trade. So we look above for our stop loss for the levels. The QL above is your tight stop loss on a bearish trade from the bull bear KPL, and your midpoint level above the bull bear KPL, specifically the first midpoint level, is going to be your standard stop loss. With this daily key level strategy, it is recommended to use the standard stop loss. However, we've included the QL levels with this indicator for those that prefer tight stop losses, but just be aware that tight stop losses are more prone to getting stopped out. Yes, you will have less at risk with a tight stop loss, and on many occasions, neither the tight stop loss nor the standard stop loss will be hit on your winning trades. However, the QL tight stop losses are more prone to getting stopped out than the standard stop loss. In today's trades, our two losing trades, both the tight stop loss and the standard stop loss were hit on both trades. What we'll be showing you as far as the loss here, as we went over in the initial part of this video, is the losses on the standard stop loss, as that is what we use in all of our trades, and that is what we recommend to use. However, as I stated, every trader is different. Every trader has a different risk profile and different process. So if you prefer to use the tight stop losses and then re-enter a trade, if you want to go through that process, then that is fine. Okay. So we have our tight stop loss here on this bearish trade from the bull bear KPL on the 9:30 a.m. opening candle, and then we have our standard stop loss here. With this indicator on any given trade, any given bullish or bearish trade off of any of the main key levels, you always have three different option strikes that you can choose from. The standard play is going to be the at the money strike, the option strike that is closest to the price of the level that you're taking the trade from. In this case, we're taking the trade from the bull bear key price level, 69.4632. So the 69.45 strike is the closest strike to that. So that's the 69.45 put option. SPX trades in 5-point increments in case you're not familiar with it. So 69.40, 69.45, 69.50. Now you're waiting to the close of the candle to purchase the put option. So we have the ask price and the closest candle, $10.80. Now what about the other two strikes? With this indicator, to figure out the other two strikes in any given trade, you have the level you're taking the trade from, then what's the direction of the trade, in this case down. You look down to the first midpoint level, and that is going to be your first out of the money strike to consider on this trade. Today's midpoint level is 69.3992. So the closest strike to that is the 69.40 put option. The furthest out of the money strike you can consider on this bearish trade from the bull bear KPL is you look down one full level away in the direction that you're trading, and that is the S1 69.3351. The closest strike to that is 69.35, the 69.35 put option. So the 69.40, the ask price on the candle close on the 9:30 a.m. candle closing at 9:32 a.m. is 8.80, and the 69.35 on the candle close on the ask is $7.10, as you see here in these boxes. Now, as you'll see here on the 9:40 a.m. candle, we were stopped out on the standard stop loss on this candle here. These prices here, these losses, are based on the lowest bid price of the stop out candle. The lowest bid price would actually be the high of this candle. So we're basing the loss on the lowest price in this given candle that was the stop out candle, because that is the worst case scenario. In practice, you may experience less of a loss depending on where exactly the candle closed at versus the relationship between this candle and your stop out level. However, it's best to look at it as the worst case scenario. So here, the 69.45, worst case scenario low of the candle, 7.40. 69.40 was $5.90 low candle, and the 69.35 was $4.80. So the 69.45, we have a loss of $340 per contract, 69.40 a loss of $290 per contract, and the 69.35 a loss of $230 per contract. Now, if you use the tight stop loss, you would have less of a loss on this, and you would have gotten stopped out here as this candle wicked up through the QL above level, the tight stop loss. And that would have been the 9:36 a.m. candle. Now we'll look at the second trade. Okay, so now we have trade number two. Trade number two is also a bearish trade. So remember, we were stopped out of our standard stop loss here. So the next opportunity is going to be on this candle here, which is a fairly long candle, and it breaks below the bull bear key price level and also closes below the bull bear key price level. And this close of the candle is still within the acceptable range for a BBKPL level based bearish trade. So we have a bearish entry on the BBKPL level on this 10 a.m. candle close. We have the same exact, since the trade is being taken off of the same BBKPL level, we're using the same standard stop loss and same tight stop loss on this bearish trade. Okay, so here we have the same strikes as well, because this is basically a repeat of re-entering the same trade. So we have the 69.45 put option. Excuse me, I made a typo here. This actually should say as price on the 10 a.m. candle close, so my apologies for the typo on this. But as you can see here, we do have the 10 a.m. Data boxes here. So the ask price on the 10 a.m. is $10, as you see here. The 69.40 is $8, as you see here on the ask on the close. And the 69.35 is $6.40, as you can see here on the 10 a.m. All right. So this trade, initially, we had to move back up to the YDH level. It tried to break above the PMH level. However, it fell back down. It was in profit for some time. However, it did not meet the minimum threshold for at least a scalp, which is a one level move. A one level move is calculated from a one level move in your favor. For a scalp is calculated by the level that you're taking the trade from. You look down, since this is a bearish trade, and one full level down is S1. On a regular trade, you would have the S1, S2 midpoint level opened up, and that would be your 1.5 level move for a regular trade. And then the S2 would be a 2 level move for a regular trade on this particular trade. However, in this case, it did not meet that. and eventually, after whipsawing around, it eventually goes back up. And here we're stopped out on the 11 a.m. candle here on this wick up through this mid BBKPL level, which is our standard stop loss. And as you can see here again, you would have gotten stopped out earlier on this trade if you had taken the tight stop loss. However, as we talked about earlier, we do recommend that our recommendation is using the standard stop loss over the tight stop loss. However, that is still up to each individual trader to decide for themselves. Okay, so again, the lowest bid price of the stop out candle. So in this case, as you can see, this wick up, this would be the high of this wick here in this particular case. So on the 69.45, the low of the candle is 450, the 69.40, the low is 330, and the 69.35, the low is $2.40. So on the 69.45, we have a loss of $550 per contract. The 69.40, we have a loss of $470 per contract. And the 69.35, we have a loss of $400 per contract. Now we'll move on to trade number 3. Okay, trade number 3. Trade number 3 is a bullish trade. So as you remember, we were stopped out here on the standard stop loss on our second trade. We're waiting for the next trade opportunity. And here we have it here as price comes down and we have this long wick down. We have this long tail candle here, which wicked down below the bull bear key price level and then closed back above it. This is the 11:28 a.m. candle. So the 11:28 a.m. candle closes above the BBKPL, and the close of the candle is still within the acceptable range for a BBKPL level bullish trade. Bullish entry on the 11:28 a.m. candle. Now on this, our stop losses are still going to be level based on the entry. However, they're going to be the reverse of what we had before when we had the bearish trade off of the BBKPL. This is now a bullish trade. So now we're using if you're going to use the tight stop loss is the QL below the BBKPL. And the standard stop loss is going to be the first midpoint below the BBKPL. Now, as far as strike selection, it's the same process, just in reverse. Now we have a bullish trade, so we're going to look up. We go to the midpoint level here, 69.52.53. So that's going to be the 69.55 call option. Whereas our standard at the money play is going to be the closest strike to the bull bear key price level, 69.45, just like in our first two trades that were bearish trades, because they were both based on the bull bear KPL, but they were bearish trades. This is a bullish trade, so it's a 69.45 call option. And then our furthest out of the money is going to be based on the R1 level, the one level above. That's going to be the furthest out of the money we can consider, 69.59.13. It's a little hidden by these candles here. So that's going to be the 69.60 call option. Okay, so we're entering on the candle close again. Here we have the ask prices on the 11:28 candle. As you can see, the 69.45 is $8.60. The 69.55 is $3.50. And the 69.60 furthest out of the money is $2. Now here we got a continuation move up. Once it broke above and held above the PMH level, it then began to cross above this midpoint here. And then 2 candles later at 11:44 a.m., we have the R1 hit for a scalp only, one level move required for a scalp. Now again, you're taking the level you're taking the trade from. What's the direction of the trade? Up. We look one level up. That's our scalp exit if we're only doing scalps. Now here we have the data boxes for the bid prices on the candle close. 69.45, 15.70, profit 7.10 per option. 69.55, $8.30, profit 4.80 per option. 69.60, that we paid $2 for is now $5.40, profit $340 per option. Here, after a brief stutter step, it tests again and closes above the R1 and then begins its trajectory up to the mid R1, R2 level. And you can see here the wick of this candle actually hits and goes very slightly above the R1, R2 midpoint level. Now this is our 1.5 level minimum required move for a regular trade. The bid prices here are on the candle close, the 69.45 call, $20.10, profit $1,150 per option. 69.55 call, $11.60, profit $810 per option. 69.60 call, $8.10, profit $610 per option. Again, that one we only paid $2 for. Now we'll go to trade number 4. Okay, so we got the 1.5 level hit move here. Trade number 4 is a bearish trade off of the R1 level. Remember, we said that you can take bullish or bearish trades off of any of the main key levels with the V2.0 indicator. The main key levels, again, with this indicator are the bull bear KPL level, the R1 through R6, and S1 through S6. Here we have a decisive close through at 12:50 p.m., closing below R1. There were several bits of news that came out today from President Trump that were fairly negative news regarding things that he was doing with the economy. So this happened to coincide with some news that was coming out, and this continuation to move down was when, as other news dripped out throughout the day of other things that he was considering doing came out, the market reacted negatively to those. Also, we were recently at all-time highs, so combined with that, seemingly just gave traders the opportunity to take some profits off the table. In any event, regardless of whether it was due to the news or not, we have a decisive close down through R1. Whether it was just a coincidence with the news or whatever, it really doesn't matter. So we have this decisive close, and here we have our levels based on taking this bearish trade off of R1. So we turned on the QL above R1, and that is the tight stop loss. For those that prefer tight stop losses, that is what you would use on this trade. The standard stop loss, again, is going to be your first midpoint above the level that you're taking the bearish trade from. This is the level we're taking the bearish trade from. First midpoint level above. Standard stop loss is this level here. Again, we're taking the entry on the close of the candle. And what are the 3 different options? 69.59.13 is the price of this level. So the at the money standard play is going to be the 69.60 put option. The 2 out of the money plays you can consider on this trade from the R1 level. You're going to look down, since it's a bearish trade, to this midpoint level here, 69.52.73, and that is going to be the closest strike to that, the 69.55 put option. Then the furthest one you can consider is going to be the bull bear key price level, because that is 1 full level down from the bearish trade of R1, 69.46.32, so that's going to be the 69.45 put. So here we have the data boxes for the close of the 12:50 p.m. candle. As you can see here, 69.60 is $8. The 69.55 is $5.30. And the furthest out of the money, 69.45, is $2.40. As you can see on this trade, neither the tight stop loss or the standard stop loss were in jeopardy on this trade. And we continued down and then went down below the PMH and the YDH levels, tested those levels again, moved back up, and then had a decisive move back down in this series of candles here. Then on this 210 candle, we have a BBKPL hit. That's a scalp only because that's a one level move from the level we're taking the bearish trade from, R1. One full level down is the bull bear KPL. Bid prices on candle close $69.60, put $14, profit $600. $69.55 is $9.90, profit $370. $69.45 bid price on the candle close $4.30, profit $190. And these are all up here. Then at 3:08 p.m. we have the hit of the BBKPLS1 for the regular trade. This is the 1.5 level minimum required move for the regular trade. 1.5 level move, R1 to bull bear KPL is 1 level. Half level below that is 1.5 levels. 3:08 p.m. Bid prices on candle close, they're all up here. $69.60, $19.80, profit $1,180. $69.55, $15, profit $970. $69.45, $6.30, profit $390 per contract. Now here on the 3:14 p.m. we have the S1 hit. That is a two-level ideal move for the regular trade. What we mean by ideal move is that in about 80%, 85% of your sessions in a normal year, two-level moves are going to be generally the extent of most moves. You're generally going to see moves between 1.5 levels to 2 levels in 80 or 85% of the sessions. And that is based on having low to moderate, or what would be deemed normal volatility. And then if we start having extreme volatility based on some news coming out, or at least increased volatility, that's when you would see moves that are going to be greater than 2, where you would see the 3 and 4 level moves. Then when you get to extreme volatility, like we saw in the COVID pandemic for weeks at a time, or in the 2007-2008 market meltdown and real estate meltdown, where we had very high volatility for weeks at a time. In those cases, and those are the cases where you'll see moves that would generally be 3-level move minimums down to 6-level and above moves. Okay, so bid prices on candle close. Here we have them here, the 3:14 p.m. data boxes. Bid prices on candle close 69.60. Put 27.40. That's a profit of $1,940 per option. 69.55 is 22.40. Profit of $1,710 per option. 69.45. $12.90. That's a profit of $1,050 per option. Remember, that was only $240 to start with. Here we have a brief move to try to get back above and stay above the PML level. That move did not succeed. And we had a forceful move down the next 4 candles here. And then on the 6th candle, we had the hit of the mid S1, S2 hit. That's now a 2.5 level move for this regular trade on the 3:30 p.m. candle here. Here are the data boxes for the bid prices on that candle close at the 3:30 p.m. candle. 69.60 put, 35.50 profit, $2,750 per option. 69.55 put, $30.60 profit, $2,530 per option. 69.45 put, $20.70. Remember, we started out at $2.40 on that one. Now profit $1,830 per option. And then we have still a move down, and we get stalled out here until the end of the day on the S2 level. So at 3:36 p.m. we have the S2 hit here. That's now a 3-level move for regular trade. 3 level from the R1, 1 level, 2 levels, 2.5 levels, 3 levels. Here are the data boxes for the 3:36 p.m. candle close. 69.60, $40.20 bid on the candle close, profit 3,220. 69.55 put 35.20. Remember that one was 5.30 to start with, profit $2,990. 69.45 put 25.20, profit $2,280 per option. And remember that one started at 240, so that is more than a 10x on that one. Then we have 5.30 starting at that one to 35.20, and then $8 starting price for that one now, 40.20. Okay, now we'll look at the final trade of the day, trade 5. Okay, trade number 5. Trade number 5 occurs at 2:12 p.m. on this candle here, which is a close below the bull bear key price level. This candle is still within the acceptable range for a bearish trade off of the bull bear key price level. On this particular bearish trade, we're going back to the same stop losses we used on the 9:30 a.m. opening candle trade, which was a loss, but that was also a BBKPL bearish trade. So the standard stop loss is going to be the midpoint level, first midpoint level above the bearish trade level here. Tight stop loss level, the QL level above. As far as the options, we have the 69.45 put option. That's going to be your standard at the money play. It's the closest to the level we're taking the bearish trade from. The out of the money strike, we look down to the midpoint below the level we're taking the bearish trade from. First midpoint below 69.39.92. 69.40 put option. Furthest out of the money, one level away. The direction that we're trading is the furthest out of the money you can consider on this trade. 69.33.51, that's the 69.35 put option. Same entry on candle close. Here we have the 2:12 p.m. boxes here. Just $5 for this option on the standard play. 69.45. 69.40, $3.20. And the 69.35, furthest out of the money, just $2.05. Now this is also getting into the lotto play window, which if you've seen some of our other videos, which we went over lotto plays, the lotto window starts at 2 p.m. and runs to the 4 p.m. close. However, for trades in the lotto window, you're looking primarily from 2 p.m. to approximately 3:45 p.m. for any lotto trade entries. If you want to send us an email at daytradinggps@gmail.com for links to specific videos that go over the lotto option strategy. If you want to send us an email regarding that, we can send you the links to those specific videos on our channel that did go into more detail on the lotto plays. Okay, so here we have our entry. We have our stop loss levels. And at 3:14 p.m. we have the scalp only hit. One level move from the level we're taking the trade from, bull bear KPL, to S1, bearish trade, one level move down. 69.45 put, now $12.90. So the 314s are going to be here, $12.90. Profit $790 per option, 69.40, $8.90. Profit $570 per option, 69.35 is now $580. Profit $375 per option. Here we have the 3:30 p.m. mid S1, S2 hit. 1.5 level minimum required move for regular trade. Here are the data boxes for that. 69.45, $20.70 bid on the close. Profit $1,570 per option, $69.40, $15.80. Profit $1,260 per option, $69.35, $11.30. Profit $925 per option. Remember, we only paid $2 for that, $2.05. 336, we had the S2 hit, 2-level move on the regular trade. Here are the data boxes for those. 69.45 bid on the close of that candle, 25.20, profit $2,020 per option. 69.40, now $20.30. Remember, that was only $3.20 to begin with. Profit $1,710 per option. 69.35 is now $15.50. Profit $1,345 per option. Again, only $2.05 to begin with. Okay, so that's going to wrap it up for today's video. We thank you for taking the time to watch the video today. For you taking your time to watching the video today, if you are interested in purchasing this indicator, in return for you taking your time to watch this video today, you can send us an email at daytradinggps@gmail.com to request a discount promo code, and we will send you a discount promo code to use on your purchase of the indicator that will give you a substantial discount. All of our indicators are sold on a one payment for lifetime access basis. That means you make one payment and then you have access to the indicator for life. And lifetime access also means that you get any future updates to the indicator at no additional charge, and any future versions of the SPX Daily Key Levels indicator as well at no additional charge. We are going to be coming out with a V3.0 version of the indicator sometime in the next 30 days or so. Once that happens, the price of this indicator will go up substantially from what it is now. However, if you go ahead and take advantage of the discount promo code now and get your lifetime access to the V2.0, you will be able to get in at the much lower price, and you will not have to pay the substantial price increase by waiting for the 3.0 to come out. The 3.0 version will have many new substantial features added to it, and as I said, your lifetime access includes all future versions of the indicator as well. So if we come out later with a V4.0 version or any version above the 3.0, you would also get those at no additional charge. Okay, so thank you for taking your time for watching this video. Please hit the like button if you like the video, and please subscribe to our YouTube channel if you'd like to be notified when we post other videos. We also have indicators for stocks and daily key levels indicators for stocks and ETFs. We have one for futures. We also have one for the NASDAQ NDX index for those that prefer trading NASDAQ. And we also have one for Forex and cryptocurrencies. So we do post videos about those as well from time to time. We will be coming out with new versions of all of those indicators as well. So all of those indicators are also available at a much lower price today than they will be after the new versions of those indicators will be coming out shortly. Okay, so thank you again for taking your time for watching this video and supporting our channel, and we wish you much prosperity in all your future trading.